Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Today we once again will take a look at the Japanese yen because euro currency stands flat, and in fact nothing really interesting is going on there. Well, maybe except one thing. On the euro currency, it's the chance that the double repo buy on the daily time frame chart could be formed, but that probably will happen not today, and if it will happen at all, as a result of the probably as a result of today's European Central Bank meeting, we will discuss it tomorrow. But right now, at least some action Japanese yen is showing, and that's why we could prepare the update on this currency. So on the daily time frame chart, we said that as market has hit the resistance, it could start to form the retracement down that could let us to take the long position. With this really tremendous scenario on the Japanese yen, this is the potential butterfly sell with the target around 130-106.60 area. It's really great potential of this trade. And that is also the part of the monthly bullish stop grabber pattern. Particularly speaking, the bottom of the stop grabber stands right here. And right now we are mostly focused on the possible retracement down, how deep it will be, how it will start, and what pattern could be formed at the starting point of this retracement. So on the daily time frame chart, we just see that market right now is forming some sort of the bearish engulfing pattern, although current candle hasn't been closed yet and it's just still forming. But right now here it looks like this engulfing pattern, and that probably could be the sign of the starting retracement. The major reason for this retracement is threefold. First of all, that is the 618 resistance of the whole move down from this top to this low, 618 resistance. Also, that is the target of this A, B, C bottom D pattern. So that creates the Jordan agreement resistance. That's more strong than just a simple resistance, fib resistance level. And finally, the third reason is the monthly pivot resistance one. Although market hasn't quite touched it, but it stands very close to this area, and this also could be the resistance for the current market. So as you can see, the reasons for possible bounce down exist, and that's absolutely reasonable and logical retracement right now. Trend holds bullish on the daily time frame chart. Now we'll take a look at the 4-hour time frame chart. We could get another update that we now have and that we didn't have yesterday. That's here, guys. By the way, you could see this ABCD pattern that market has totally completed it. Take a look that we have double repo sell pattern. That's the pattern of the Jordan framework. So you can see it thrust up, although it's not very good that we have this small consolidation, but this consolidation hasn't quite reached the 3/8 support of this action to the upside. And take a look, market hasn't closed below the 3x3 moving average. That's the good signs. So in general, I suppose that this thrust is not perfect, but still it is suitable for possible Jordan double repo sell. And now this double repo sell has been confirmed. So you can see close below the 3x3, thrust up, close below 3x3, close above, close below. That's the confirmation bar of this pattern. The target of this pattern, usually the 50% support of the double repo thrust. If you take a look at the fib support levels, you will see that the 50% stands very close to the confidence support. So that's the area that we have discussed previously and that we intend to use as the potential entry area, at least right now. If we will see the reasonable and gradual retracement right back down, well, that will be the very good area for searching to take the long position. And if this double repo work, still, guys, the double repos patterns on the intraday charts has the tendency to fail, and they are not as reliable as on the higher time frame charts, as on the daily, as on the weekly time frame chart. That's why I would like to show you another picture on the hourly chart of the Japanese yen that also could become the reality. So take a look. That could be the butterfly sell pattern. As you can see, that is opposite pattern to the double repo. Although this is also a reversal pattern, and also it probably will trigger retracement down, but this will happen only after the double repo will fail. Because by the double repo pattern, market should not show any return right back up, and especially taking out of these tops. So some minor bounce below the 3x3 is acceptable, is possible. So if price will stand below the 3x3 and then turn to the downside, that's the perfect action that is suggested by the double repo. But any action above it, and especially taking out of these highs, will tell us that double repo has failed, and that could really be starting point of this butterfly pattern. Here I draw the 618 resistance 102.64 area of this thrust down, because that's the level that Judd Napoli usually tells about as the failure point of the double repo. So by the Judd Napoli idea, market should not pass through the 618 and close below the 618 resistance of this move down to keep double repo valid. If this will happen, if market will exceed this point and approach to this top, that could be the sign of the double repo failure. Although, guys, in the modern conditions on the markets, I prefer to use softer conditions for the double repo failure. Usually I apply the tops. So if market will approach to the top or even taken out, that's the failure of the double repo. But anyway, that's the Judd Napoli rules and how it has described it in his book. That's the level to watch for. So what we could do here, you have two different choices. If you trade on the daily chart, you should do nothing. Just wait when the retracement will start and when the market will hit the level where we would like to take the long position. But if you're a scalp trader and you would like to trade the market on the short side of the market, you have two choices. First choice, you could try to take the position based on the double repo pattern, but place stop above the butterfly target. This will save your position if market will complete the butterfly pattern, because after that retracement probably will start, and you will not be able, you will not need to take the position again. That's the first scenario. It assumes greater stop, but that is just let the market to breathe, because even if market will complete the butterfly and retracement will start, and if even double repo will fail, in this case you will be still in the trade and you will be able to take the money on this trade. Second position, you have also two possible other reasons. First reason is just deal with the double repo purely, so trade as it should be traded. So take the position, place stop somewhere near the top, okay, of the double repo, and wait what will happen. Or final solution is, if you trade the harmonic patterns, wait situation with the butterfly. If butterfly will be formed, you can try to take the short position based on the butterfly. If it will fail, a market will show move down and taking out of these lows, because that is the invalidation point of the butterfly. If market will take out of these lows, you could try to take the position on some minor retracement here after breakout of these lows, maybe on the 15-minute chart, on the 5-minute chart. So that's three possible scenarios that you could apply for trading short-term Japanese yen. But again, our major focus, as I said, is the retracement or reaching of this support, because there is in fact the pattern that we would like to try to trade, and that's really our major primary object on the Japanese yen. All other patterns, including these patterns and the pattern on the 4-hour time frame double repo, they are looking nice and really absolutely not bad setups, but that is just add-on additional patterns that could be traded inside of our big picture. So think decide is really big choice of the different patterns that you could trade today. Make your choice, and the major condition that it should be stand in agreement with your trading style, with your risk aversion, risk approach. So in the general situation on the Japanese yen is really interesting. Let's see what market will show us today and during tomorrow trading sessions.